Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are you're watching this video because you got an email from me telling you that it's up. If you're not on my email list, go below this video into the description, and you'll see how to sign up completely free, and you'll get my updates every morning before the opening bell. Now, a few minutes before today's opening bell, it's Thursday, July the 15th. I do want to show you the trading software that I use. One reason I'm doing this now, this topic, is because I don't really think much is really going to happen today that is important at all when it comes to the stock market or even the financial news. And let me show you what's going on before the opening bell. So we can take a look at things. I've got to switch my screen and do that. Just be patient just for a second. It won't take me long. I don't want you to lose your patience and go away. I've got to find the right button. Yeah, I'm doing it live. As you can see, I'm doing this this live. So share. There we go. So this is the CNBC website, just to take a look at the headlines. The Dow's gapping down 150, S&P's down 13, NASDAQ barely up. And when we flip to gold, we can see it's basically even. Bond yields are ticking down just a little bit. So there's not much happening on the open. And really, you can't make any meaning out of that. Anyway, look, the market's rallying. It's been rallying in a big uptrend really since May of last year. So a down opening doesn't mean anything at all. In fact, when the market is rallying this strong, if anything, a down opening is a buy. That said, I do think we could be heading to possibly, I got to watch the action, week by week, but I do think we could be heading to some sort of peak, something like what we saw last year around Labor Day. But I don't think it's happening today. I don't think it's happening next week. Yes, it's true that the market will at times, most of the short-term peaks do come during earnings season, but reality is the stocks, I think, that could coincide with that, they're not reporting earnings till several weeks from now. I'll talk about them in a blog post probably early next week or over the weekend. We'll see when. But if we look at what's going on, the 10-year bond is ticking down. Economic data, the growth is peaking. Basically, it's peaking in China. It's likely doing that here. That's why, although we've had these giant headline inflation numbers, when you look at commodities, they have been consolidating now for almost 2 months. One stock that is moving is AMC, down 15%. Apple, though, is up 2%, but AMC is getting smashed. It's a pretty big hit. I did a video about AMC the other day saying that, look, there's all these people in AMC that are claiming that it's a buy, that the only reason it's not going up is because there's hedge funds manipulating it. I did the video completely debunking that. But the sad reality about AMC is if I flip to my Robinhood account, yeah, I got a Robinhood account, really small, sort of as an educational tool so I can show you the account, talk about how I trade in it. But I also have it in order to look at this, the 100 most owned stocks ranked by the number of people who own them. And number 3 on the list is AMC, so people are basically trapped who had bought it on the run up just because they saw it going up. And now they're stuck because, it's not going up. It peaked out at 70 and it rolled over and now it's in a downtrend. It's a complete total disaster. I did a trade on it. A few weeks ago, I sold calls on it that are expiring. I think it's next Friday they expire. It's not a trade that means anything to me, though. It's like a penny out of all my money on this trade, just something to do because it's easy to sell calls. That's a whole nother topic. But the reason I'm really bringing this up now is to segue into what I want to show you. That's the trading software I use. Because most people who've opened up brokerage accounts over the past 12 months have done so with E-Trade, Ameritrade, or Robinhood. And Robinhood has very limited information. You know, it has these lists that people see and they gravitate into the stocks in that list with no real game plan at all. They just think, well, other people are doing it. I want to be a part of that. And then they go on message boards where they're being hyped up and told rumors and nonsense, such as with AMC. And then they get stuck and trapped. But the real reason they're getting the first step that's leading them into all these other steps that I don't think lead them anywhere good is the simple fact that they enter the markets using these trading software programs that show them zero useful information. So they have nothing that they can really base their decisions on. So, you know, what they're being forced to look at is these lists and then daily price action, daily price action, daily price action. So you see something like AMC go up day after day after day, and then they get sucked in. But they're looking at daily price action. And as I said, with today's U.S. stock market action, what's happening on the open, the market's gapping down, but that down action is pretty much meaningless. It doesn't mean anything. Daily price action is meaningless. You can't make decisions based on daily price action. You've got to use something else. Okay. Yeah, it's nice to be up $3.74 on the opening bell in my account, but that doesn't mean anything, it just doesn't. So you got to use tools to make good decisions. One tool, the most important tool, is charts, but not these kind of charts that don't mean anything. So I like to use Stockcharts.com, and you can use them for free because it allows me to put indicators on the charts, which I like to use. But just as important, it enables me to put today's price action in context with what has gone on in the past. So today, let's say AMC was to gap up. There's no way I'd be excited about that in the context of the overall chart pattern, which is AMC rolled over last month and is in a downtrend. So that's just what it is. But at the same time, if I look at the S&P 500, it's gapping down a little bit today. Well, it's been going up for 12 months. Does today's gap down on the open, is that a reason to get scared and sell or make any sort of decision? No, not in context of what's been going on. So charts are a key tool. I also look at valuations and fundamentals and earnings to figure out what is best to buy. But, even in that regard, it's the trends in the charts that are the number one factor. So Stockcharts is something I use, but I also use another program to really dig deep into the markets and what's going on. In this program, it may be, for me, actually more important than Stockcharts. One of the real reasons I use Stockcharts and show it to people in my blog posts is because the charts look nice. The charts on this other program, they're not as pretty. They don't look as good on the internet. But the program itself, in a lot of ways, is actually more important to my decision-making process and to actually help me figure out what's going on in the financial markets. And what I'm speaking about is the program TC2000. And they have a website with a free version called freestockcharts.com. So you can go there and play around with that. And if you get in, you can find, they used to do seminars that were free throughout the country to help educate their customers on using the platform. I actually attended one a long time ago. I've been trading the markets since the late 90s, so I've been around for quite some time. But they used to have these seminars, see if they still do. Because if you're completely new to the market, that's a good way to get started. A better way, frankly, than watching YouTube videos or listen to podcasts, to go somewhere in person with a group of people and shut off your phone, get away from the internet, get away from the television box, just spend time in a room in a seminar type environment, and it helps you concentrate and focus much more, which people are having much more trouble with in our day and age, no doubt about that. So all that said, what I want to do today is use this software for a few minutes with you so you can see how it is I use it, sort of how it works. I'm not trying to sell you on it because I'm not going to make any money if you do buy it. But like this video to let me know that you do like these videos and this is sort of information. So pay me with a like. That would be fun. So let me load this up. And then, unfortunately, I believe there's different versions of or different levels of service you can buy. I actually use 15-minute delayed data. So the data it's only 932. The data is, I think I'm on the 15-minute version. The data will be from yesterday, but it doesn't matter. Okay, this is it, TC2000, and I can type in any symbol. So let's look at the S&P 500. It was up 5 yesterday. Here's the Russell 2000 ETF. It was down. NASDAQ was up. ARC was down pretty good. Buzz is dumped 2%. I want to make a note of this. So although I think the market rally is going to continue, what you've just seen is troubling. What you've seen is the S&P going up, the NASDAQ going up, but the Russell 2000 down and lagging the S&P, and the ARC ETF and the Buzz ETF, which both hold many of the same stocks owned by Robinhood traders and most of the small investors, traders in the market. Look, 25% of the market volume, I talked about this last week, is coming from small traders. And the stocks these small traders are in are lagging the S&P 500. Look at the Buzz ETF, down 2% yesterday, while S&P was up. That's why these Robinhood stocks are awful. You can't just be a herd trader and be successful. That was last year. But when everyone is in the market and the herd is fully formed, then the herd leads to the cliff. We're not on the cliff yet, but the people are already starting to lose. So it's not good. But look at the New York Stock Exchange Composite. It was down too. Now, I know it's hard for you to see on a YouTube video, but on the bottom of the chart, you can see the volume bars. Green are up days, red are down days. The white bar on that chart is on balance volume. It measures a running tally of up volume days subtracted by down volume days. When that indicator goes up, that means that up volume days are having bigger volume than the down volume days. When that indicator is flat or going down, opposite's happening. That's a sign of distribution. So the New York Stock Exchange Composite, that unbalanced volume is in a slight downtrend while the market's been going up. That's not good. That's unhealthy for the market. Now, S&P, we're okay. So we already can see right now that market leadership is in S&P 500 stocks, not in FAD stocks, not in the New York Stock Exchange Composite. That means there's likely a select number of stocks helping the market up. This is also confirmation of what we knew about was starting in March, a rotation out of FAD, out of past winners of last year into new issues. Some of those new issues I've been talking about quite a bit, I'm invested in them. One is real estate stocks, RWR ETF. You can see how it's been doing pretty well since New Year's. And the unbalanced volume made a new high yesterday. Not a whole lot of people trade this ETF, even though I own it and talk about it. I'm not in stuff most people are in, just the way it is. It also makes it so the things I talk about aren't that popular with, the millions of people that are in the markets. But there's nothing I can do about it. So let me think. CXP. That's a stock that I do own. The unbalanced volume in that is down. That's not good, but it's what's going on. So if we look at the Dow, it's got good unbalanced volume. It's lagging the S&P 500. Now I didn't even show you. I'm just looking. I'm not even showing you the power of the software. You see a suggestion of it though, in how we're looking at what's leading, what's lagging, but we can drill down much deeper than that. That's the key. The key to beating the market is very simple. That key is to be invested in the best stocks of the sectors that are beating the market. That's it. If you want to be a winner in the market, you got to be in the stocks that are beating the market and into the winners. That means if you're in Tesla, you want to get out. It means if you're in AMC, you want to get out. You want to be in the winning stuff, not stuff that won in the past and is now lagging. So one of the interesting things this software does is it breaks the entire stock market up into sectors. And you can rank the sectors and see how they did. This is just what they did yesterday. Foreign utilities, personal computers. Look, personal computer sector made new high. Cigarettes are doing very well. Tobacco is doing pretty good. Beverages are breaking out. Remember, rotation out of fad into companies that are basically cyclical, selling products to people that are in the real world, basically. Here's REITs are on the list. But look, we're just looking at yesterday's action. Motel REITs, gold. There's gold. This is yesterday's action. Well, again, one day's action isn't necessarily meaningful. So you got to keep your mind off of one day's action or opening action. It's generally not meaningful. But this is what people's eyes are always focused on. One day action, one day action, one day action. But it's the most meaningless action there is. But that's what the first thing you encounter. That's what you ask yourself. What's the market doing today? And that's what we started the video with. It's just human nature. But let's drill down into the real power of this. If you press Shift T, I can then rank performance by a period of time, not just one day. I could do it for years, but let's just look year to date, just for the argument's sake. Reality is the best time to do this is when the market has pullback, but that's a discussion for another time. So let's just look at year to date. We're going to rank sector performance year to date. The best sector in the entire market has been non-metallic mineral mining stocks such as Vail, which is actually one of my top stocks I own is Vail. I think BHP is on this list. You'll find copper stocks on this list, I believe. Oops. What's going on? I made a mistake. Why isn't this working? Let's do it. Oh, I think it's looking for today's data, which hasn't come out yet. I was accidentally talking about today's action. There we go. Here we go. So you're going to see the best sectors year to date. And if I want to look for the top sectors, this is where I'll do it. We got oil stocks, which is something we've been talking a lot about. Actually, steel and iron stocks, shipping stocks among the top sectors, right? REITs, hospitals. This is year to date. Housing, aluminum, sporting activities, stores, grocery stores, textile plants, brokers, general contractors, auto dealerships, book publishing, energy, overall energy. And overall energy has been one of the top sectors. We've had a pullback for 3 days. So now we're not going to talk about it on fast money, because they're just going to talk about, generally speaking, the things that go up the most on any given day, because that's what people want to hear. That's why, and if you don't give people what you want to hear and you're on television, your ratings collapse. And no one's going to watch your YouTube videos either. But we're about making money. And energy still remains one of the top things to invest in, even though now no one's going to talk about it because it's gone down for 2 weeks. But, and the thing is, I'm not telling, regional banks are on the list. Semiconductors are on the list. The best time to buy, though, is when the overall stock market has a pullback, a correction, and then you look to see what are the top sectors, and then you buy that dip. That's not the moment we're in at this moment. So that's why I hesitated about, go buy energy stocks, despite the fact that I've got over 10% of my own money in energy stocks. Stocks like Exxon, Chevron, and I own shipping stocks. I talked about them too, with a smaller amount of my money. But anyway, one of the things I really like about this program, though, is I can go through this very fast just by pressing the space bar. I can go through the entire list. Metals and mining was on the list, 26%, despite the recent pullback in gold and silver. It's on the list right there. Industrial metals, diversified investments, cement, paper products. None of these are fad Robinhood stocks, by the way. Notice that. None of these are Arc Magic stocks of Cathie Wood. That was last year. This is this year. Even though everyone's fully invested in them because they jumped in the market last year, got real excited after the election and in January and February, and then they're stuck while they're missing out on all these leaders. I would suggest that we're in a market rally, and if I was fully invested in ARC and these fad stocks, I would be looking to get out in the next couple of weeks, because I think there's a highly likely possibility that we're going to see a short-term peak that could lead to a pullback in this market at, in August or after Labor Day. I can't time it right now. I can't look that far ahead, but I'd just be looking to get out of fad losers and get into these new leadership sectors. If there is a pullback, that doesn't mean sell everything you own, but get out of those losers, I think. I'm not saying the market's going to crash or anything like that, but you get pullbacks from time to time. And if you want to take some money off positions to rotate into new stuff, do it. You can't get out at exact tops, but you raise a cash reserve of losers, by selling losers, so you're prepared to buy when there is a dip. It's not about trying to be perfect. It's about periodically rotating out of losers into new stuff. And I say this because I know so many people are in them. Okay, we just updated the 15-minute delay hit. So this is the opening bell they're showing us. That was 15 minutes ago. So just out of curiosity, what happened on the opening bell? Interesting enough, the stuff up the most, a lot of the stuff up the most on the opening bell is also among the top leading sectors of the year. Sporting activities, we can see music, copper is up pretty decent. REITs, processing systems. What are among the losing sectors? Sectors are among the biggest losers of the year on the opening bell. Foreign utilities, education products has been down 48%, and they're the worst performing sector, among the worst on the opening bell. but that can change. But the beauty of this is you can also look at an ETF. Say we want to look at let's say I'm interested in gold stocks, okay, and there's the biggest gold. I own it. You know, the biggest gold stock ETF is GDX. All right. Well, one other interesting thing this software can do for you is show you what are the stocks inside GDX. And then you can quickly look through them. GDX holdings right there, click of a button, 29 of them. And I can just go through all of them and pick out, instead of buying the ETF, I can buy the individual stocks inside the ETF. And there's a lot of advantages. I do that in my main account. In my IRA, I own GDX. In my main account, I don't. I own individual stocks inside GDX, and I can quickly chart out the stocks inside the ETF, clicking the space bar. I generally don't do it that fast, but I can see exactly what's going on. Here, I own most of these stocks, not all of them, but a lot of them. WPM is one I own. It's got a nice chart right there. I don't own those two. Look at AEM. It's looks like it looks like a bottom at 60. We can see exactly what's going on. But seeing what's going on inside an ETF with the stocks gives you a good idea of where the ETF might go. And then if you go get the information on the ETF, you'll often discover that only 4 or 5 stocks weight like 30% of the entire ETF. So these ETFs, a lot of them aren't that diversified as people think they are. But you can also get an idea, a better idea of where the ETF might go by looking at what those stocks inside the ETF are go, especially the ones that heavily weigh it. So if we look at, I know Tesla is a big weighting in the ARK ETF, which a lot of people, I believe, are trapped in right now. And here's the 25 stocks inside the ETF. This stock looks terrible. They look like they're all lagging the market. And look at the on-bounce volumes, miserable in them. I mean, this one's doing terrible. Square, honestly, I don't have a position in any of these stocks. This is a stock I may consider shorting in a few weeks. But that'll be a topic for later. I don't think now's the time today to short stocks. These are just bad charts. Look at this. DraftKings, relative strength collapsing, on-balance volume collapsing. And these are the type of stocks Kathy Wood is owning in her ARK ETF. And so many individual investors with Robinhood accounts are in too. And that ARK ETF is in the top 100 list, and a lot of the stocks in it are in the top 100 list for a toxic combination. And to get another idea of what a lot of individual traders are doing, this ETF Buzz came out in March, and it's designed to hold the stocks that are most talked about on Twitter and social media. So it's a herd ETF. I mean, it's an insane idea to invest in that because when there's corrections in the market, the herd gets smashed. It's just it's probably the craziest ETF I've ever heard about. This is not to say every single stock in it is bad. There's a chance I own a few, but a lot of them are. And I'm going to Carnival. Is that a stock I'd want to own? Not personally. It makes sense for Amazon to be in the list and Apple. Because there are stocks with the largest market caps in the entire stock market. They heavily weight the S&P. It's one of the reasons S&P is doing well. Actually, let's look at the S&P again before we leave. But Salesforce is in the ETF. This is a strange stock. Exxon's a stock I own. That's why I was like, I'm not going to bash everything. Penn though, Penn's a bad one. And it's not because it's a bad company. It's because the stock is so crazily valued and it just too many people got into it. That's the real problem. It's nothing wrong with the company. TDOC is one of the most popular stocks among individual investors. It's a Cathie Wood Wonder stock, and it's a disaster. The chart's a disaster. And it's because so many people got in and the stock has a silly valuation. Square, we mentioned a few minutes ago, as a Cathie Wood Wonder. One I'm actually, may short, but I'm more curious about the S&P. I'm curious to know what are the S&P 500 stocks that have, let's say, led the market since May recently. Where's the leadership in the market really at right at the moment? So NVIDIA, Twitter, Fortnite, Adobe Systems, PayPal. AMD. Google, Microsoft. What I'm want to figure out, or I'm going to figure out this weekend, is which of these stocks are actually going to be the most important during this earnings season. And it's not necessarily the stocks that are up the most since May, because I want to keep a close eye on these stocks over the next couple of weeks to see how they act during earnings season. And that'll be probably the topic of my next or an upcoming video. So anyway, those are the thoughts I got today. What I wanted to talk with you about on the market open today and show you the software. And and now it looks like okay. My computer was locking up there, and that's frustrating when that happens. But anyway, it's really locking up. Hey, so what I'm going to do is ask you to hit that like button and tell you that if this is the first time you see me on YouTube, you need to hit the subscribe button down there and then hit the bell, and then YouTube will send you an alert the next time I put up a video or the next time I go live like this, and we'll be able to talk again about the markets. So all that said, I hope you got a good trading day. It's Thursday. I don't know if I'll do a video tomorrow. So if I don't, have a good weekend too. And I'll be talking with you later.